What's up, everybody? It's Big Jonas. Hope you guys are having a great Wednesday, November 13th. Thought I'd come live to you, talk about some Bitcoin price action. Remember, you guys can find me on Twitter. I'm at Big Jonas. I like to share my thoughts and ideas, what I'm seeing in the crypto markets on various charts and what have you. You guys can also please hit that thumbs up button if you enjoy my content here on YouTube. And remember to hit that subscribe button as well. And hit that little bell there so you'll know exactly when I am going live. Looking here, I'm also part of the Flux Trading Group. Check us out at fluxtradinggroup.com. And if you want to support this channel as well, you can see my referral links down below in the information. Definitely appreciate you guys if you choose to do any leverage trading or need of a VPN or want to increase your access to certain indicators on TradingView. Definitely would appreciate if you use my affiliate links. And with that, let's get to the charts. So I got a couple charts up here. This is the 5-minute over here. This is the 15. This is the 45. This is the hourly. And I wanted to take a look about different time frames and talk a little bit about today, everything from patterns to basically how to potentially spot an entry. Leverage trading, you can go both sides of the market. You can long, you can short. There are opportunities on both sides. And as we can see through our price action through a lot of these candles, it's very tricky to do so. Most of these trades happen very fast. They're basically in and out in within the hour, potentially within the half hour, sometimes only in like 5 to 15 minutes. Where we have these upper wicks here that bring us all the way up to the $8,700, and then 20 minutes later we're lost almost $100 of that, and 20 minutes after that we gain half of that back. And so what we see ourselves right now is once again in the 8750 area. We are still seeing that there is this sideways, can we call it consolidation? We have a few breaks out of the 5-minute Bollinger, the 15-minute, mostly upper wicks. The 45 as well, we're basically seeing these upper wicks here. And we can see on our hourly chart, this is actually a trading technique I like to use, moderately effective, but mostly on the hourly chart here, when Bitcoin is on its hourly chart, and you have a break of the Bollinger, lower Bollinger, upper Bollinger. These tend to be opportunities potentially to long or short, and we can see a few examples of this where the break of the upper Bollinger here, this was an intra 1 hour candle, got as high as $88,700 and basically closed towards the bottom of the Bollinger when it actually did close out. Similarly here we had a few breaks of the lower BB, and this final one here actually brought us all the way down to the 8550s before quite a climb. And once we were able to regain lower Bollinger support, it was basically a road to the top here. And again, the first and second candles that broke intra-hour above the upper Bollinger were potentially shorting opportunities. Where the first time brought the price down almost $60 around, and the second attempt, 8830s, brought it down to almost $90 below this shorting signal. Remember, I only like to use this on the 1 hour chart. I only like to use it with the Bollingers, and only really works when Bitcoin is in this very sideways price action, as you see here. When it's much more volatility, when the Bollingers and the hourly look something like this, I don't like to really use it. It's not very effective, but as you can see, when we go sideways, another clear example of where this is pretty accurate. You break the lower Bollinger, that's a long opportunity. You break the upper Bollinger, that's a shorting opportunity. Remember, these are scalp trades. These are not the long of a lifetime or the short of a lifetime. These are get in, get out, set your targets, be conservative. and basically you're playing that potential of a trade there. So these are things that I like to look at on lower time frames. What else do I like to look at? Well, it's oscillators. So I'm going to start with our RSI. I'm going to bring up all the RSIs here on these various time frames under an hour. I'm only sticking to these low time frames here because if you're scalp trading, it's definitely important to have a sense of what the 4 hour looks like, what the 6 hour, 12 hour, the daily, the 3 day and the weekly, to have a sense of what that is. But to actually make these trading decisions about what could be a good entry or an exit, what could be a good long or a short, if you're just scalp trading, because you have to react so quickly to these moves, this has to be on a lower time frame. That way, I'm basically heading up to an hour here in these scalps because most of the time, I'm using higher leverage with a very tight stop loss, and I'm only trying to get, between 60, 80, $100 potentially per Bitcoin leveraged, which can definitely add up profitable over time, but can also protect myself from not going too far into a trade, not dollar cost averaging, not doubling down, but just having the understanding that maybe I'm a little too ahead of this trade, a little too ahead of my skis here, jumped the gun, if you will, and basically had a bad entry. So we're trying to avoid that by using a variety of these oscillators and indicators to basically help us determine if there's a good move here. So again, low time frames. Here's our 5 minute. 15, 45, and hourly. And we're basically seeing a couple things. Our 5 minute was rising the past several hours. We can see basically in the price as well. We were rising more or less in the price action here. I'm going to make the 45 just our overall, so you can kind of compare it to where are we here? Kind of what we're looking at here. So basically, this patch of the 5 minute corresponded to this basically part of the price action. It was in conjunction with the price. Price rises, RSI rises. We see that as well in the 15 minutes as well. The hourly is doing something a little differently here. You can see that it's basically putting in these lower highs. We have a clear area of resistance here. And I don't know if kind of looks like a descending triangle there on our shape, where basically we could tend one more push down to test this area here. Um, Maybe another little up here, and then potentially we actually do find that bearish breakdown. And on the hourly RSI, that would basically be shown in the price quite significantly if we do something like that. So we do see an area of RSI resistance. It's not super duper the line. We basically have a little more running room, you could argue, to get just a little bit higher there and hit that resistance. But that would basically correspond with a price maybe $50 higher than we currently are now if the 1 hour RSI does hit this line, which potentially could be a rejection line, as we've seen before. So just some of the things I'm seeing on the RSIs. I do want to go to our stochastic RSI. What's really special about the Stoch RSI is that you get a variety of, you don't just have the one indicator, we basically have an oscillator. And the thing that's so cool about the oscillator is not only can we see if they're going in an upward trajectory or if they're going in a downward trajectory, but that the fact that they either can have a bullish cross or a bearish cross. These are actually things that are very important and can give you a little bit more of an understanding as to what what direction this market could be traveling here. So we have our 5 minute. Again, this is early in the 5 minute, but two things I like to look at. Remember, with my stochastic here, I do set my indicators a little bit lower. I go at higher. I'm more conservative. The default is 80/20. I do 90/10, and that basically keeps me a little more in control of my emotions and my trading. And if I want to take a long entry, again, I'm using lower time frames here, but I want to have a sense of where that could potentially be when I'm getting myself in a better risk versus reward status. So when the 5 minutes bottom out, okay, when the 15, it's not topped out. We were a little toppy, now we're not. The 45 minute, it still has running room to move higher. And when our hourly here, and again, this all goes in the hourly, we look for patterns here, and we definitely do see kind of an interesting pattern here of very similar to the RSI in that sense that we're getting close to that rejection line. And what that would mean is you would have a little bit of a rollover here, right? Maybe our leading indicator would get a little bit above here and our trailer, and we actually would see that resistance play out in this RSI. Now we look for, things happen in threes, a lot of times here. Um, so when we're looking at the RSI here, let me move this over a little bit because I can see that. Oops, camera's blocking. We're looking for potentially that third touch down, and what I mean by that is you get one more rollover and come down here. For me, that would be an interesting signal that we're nearing the bottom of whatever this consolidation is. So a better potential entry, a better R versus R could be waiting to see a rejection here, another dip down, potentially a lower low where we have our support, a lower support, maybe one more lower support, maybe one more rejection here, come back down again. And now if we do this, if we actually play a pattern like this out on the hourly stochastic here, I'd be much more encouraged to take a long if the indicators are down here, okay, than they are higher. We're waiting to see if we can actually break out of this. Maybe we do break out and actually have to go for a back test. And that would actually be very bullish when both our indicators can come back and continue this momentum on. And if that happened, we would definitely be able to see that in the price. So again, early on here, we're seeing the 5-minute continue to move higher, and we are seeing the 15 basically, again, that little range higher and having that momentum. But similarly, we get back up here again to the 100 other on the top off, something around here. We've seen before. This was actually that spike top we had after being ranging here for such a long time. You can actually see that here. Where is it here? Let's get rid of our Bollingers. Oops, can't do that, too tight. How did we used to do? It was... Is that it? Oh, look at that. Oh, I should have been doing that the whole time. So we basically see that these areas can mark, not the best entries if you want to do a long versus a short, and we basically use these to determine these things here. So let's take a look at our price action. Let's get off the 4 panel here. Let's go back to our 1 panel here. Let's go to the 15-minute and just stick with the 15-minute here. Okay, so we're talking about equilibrium as well, and let's basically map this out here. Let me clear these stats, get rid of our Bollingers. So we have our high, we have our low, we have our lower high, we have our higher low, we have our lower high, we have our, the wicks went lower, so we kind of had a lower low, but we never really closed our candle body. Again, this is just a 15-minute. We never really closed our candle body below this area. So we're still holding the equilibrium here. But this is the first kind of slightly bullish sign here that the price action was again being able to support above the $8,700 zone. So we're not seeing that rejection. And for now, what we're doing now is there's our lower low. Excuse me. A little cold here. I'm still trying to get through. 'Tis the season, right? So this is kind of what we're looking at here, and we're basically seeing, okay, what's our next area that we really want to try and tackle here? Is getting over, I'd say not just the upper wicks at 8,800, but really it was these guys here. We had several chances to get above, the 8830s, 8840s. You want to break the equilibrium, you have to do something like that. I'm getting some sun glare, aren't I? Yep, the sun is out right now. Let's do this. Whoa, that's even worse. All right, sorry for the glare, guys. Let me see if I can do... No, that doesn't do anything. Whoa. All right, well, I'm just going to have to be in lens flare for a little bit while. Hey, quick shout out to the room here. Who do we got here? Doxy, Playmaker, Goyman, hello Robin, Jose David Orion, Mattis S, SS Swartz 88, I am Joe 28, Thanks for hanging out with me. Just a quick Bitcoin update here. Remember, guys, if you appreciate my content, please hit that thumbs up button there. Got, wow, 56 of you guys watching me. Only 12 of those thumbs up. Much appreciate those thumbs up. Also, hit that subscribe as well, so you can basically stay on top of my thoughts on Bitcoin. And let me see if I can just. There, that's a little better. We'll see how long that lasts for. Oh, that's crazy. So let's get back into it. So we're still in equilibrium. We're still in equilibrium. We are still holding this low, and we're still holding these lower highs. And in doing so, volume's declining. We're looking for that kind of next move higher here, and we're looking for the volume to predicate that move. And where's my volume here? And we're just really not seeing that yet. Obviously, I can go to. I mean, I keep asking myself the question. A lot of the money in the altcoins, bleeding that out, putting into Bitcoin. The Bitcoin dominance rose. We can actually take a look here at Bitcoin dominance because it's very interesting. It's very interesting because what we're seeing here. Let me get rid of the volume. Let's go to the 6-hour. What we've been seeing is this decline of dominance and almost giving back. This spike here was when Bitcoin spiked from 75 to almost 10.5. All right, dominance rose from around 67 to around 71 in like 3 days, 2 days, 1 day. And now, as you can see, we've given back, more than 78. Now we're hitting the 84 resistance here. And the next step is just to give 100% of that back. And, frankly, if Bitcoin dominance does that, that's very bullish for a lot of alts in the sense that we're seeing the alts continue to range and not be that very affected by Bitcoin's, continued movement that we've basically been consistently seeing there. So this is still a very interesting chart here for Bitcoin dominance. In terms of a pattern here, I mean, good Lord, this is tremendous consolidation still. We do have a pretty defined line here. We'll call it right there. Actually, let me go to log. There we go. So we basically have this line. And, if Bitcoin dominance gets down here to like 66, could drop another couple more percent, tap this line, boom, and then boom, right? So there's running room for this to fall, which would actually be still pretty bullish for altcoins. Let's say over the next, I don't know, over the next week or so, what we would be seeing is Bitcoin continue to remain stable and altcoins rise, or really Bitcoin rising and altcoins also rising, but much more bullishly. And that would actually be a very bullish sign for the market because that would only be really achieved to get that happening as you had actually new money flow coming into the market and the market being convinced that, $8,400, $8,500 is a good value. Check out volume here on MEX. This is volatility volume. We're getting closer to the area where we tend to find these volume spikes. Okay, we do have definitely a little more running room to get down here. We're at 1.6. We got as high as 11. It's one of our bigger spikes here. This is that quick run to 10K. Similar ones here. This actually was our top. Okay. Notice how these big spikes, they actually have marked the tops. This was the top here. This was 13.8. And the top here at the spike, this was like 10.5, right? So these have also been bullish ones here, in April and May. But the last two have been basically bearish top markers. And that's definitely notable. So potentially still a little bit more running room left to go on that volatility index. Let's talk a little bit about the CME Futures. I get a lot of questions on this one. I'm going to tell you what I believe. And this is just based on doing this for several years and watching the CME. I remember the CME is only December of 17 was when it was born. So this chart's only 2 years old. Okay, now there are gaps. Now, why are there gaps? How are there gaps in the chart? Well, remember, this is only open during the weekdays. This closes Friday night, opens up Sunday night, depending upon where you are in the world. And because of that open and close, you get price gaps based on what Bitcoin spot price does in the weekend price frames. And so we get gaps. Now we get gaps on higher time frames. Obviously, we've had gaps on the weekly chart. What is a gap? Well, a gap is when, price closes here, price opens there. Okay, so we close at 85, we open at 89. There's a $400 gap there. This is the weekly, so 3 weeks later, the gap fills. We have a gap here. We closed on Friday, very bearish at 7,200. We opened up on Sunday night, Monday morning at 7,100. Had a gap here. That gap on the weekly, that lasted a month. And then let's fix the camera again. The flare. This is what happens when you do a late afternoon show, I guess. Whoa. Yeah, well, there's nothing I can do about that. I guess I can keep my hand here all the time, right? All right, well, we'll put a curtain up next time. I can go higher. Doesn't do anything, does it? Nope. Okay, go lower. Whew. Oh, it's coming from that window. Yeah, okay. Maybe I can do this. Try one more. Nope. Okay, whatever. It is what it is. Oh, that doesn't work. So, gaps are formed on the chart. This is how it is. This does happen. And currently, you can see, let me just hide this out here. We have, let's move me a little lower here until the sun goes down. We had a gap here 3 weeks ago. Boom. Closed out. Boom. Gap here, closed out. So we have all these gaps. Sometimes it takes a few weeks, but they do close. So what gaps are more meaningful to me than others? Because I can show you gaps in the weekly, but I can also show you gaps on lower time frames. So the question remains is which of these gaps is more meaningful and more important to keep note of, and which ones do I expect to get filled, and on which time frame do I expect them to be filled? And the answer to that is my go-to is the 4-hour. Now, the reason my go-to was the 4-hour is because there was a gap on the 4-hour over here, January of 18. Let's zoom in on it. Zooming in. Can you see it? I got a highlighter right here. There it is. Let me hide the things here. Okay, where the price action closed at 13,880 and it opened at 13. Well, actually, what did it open at? It opened at 13,720. Yeah, it opened at 13,720. So there was a little gap here on the 4-hour chart. Now, when this happened, this was back, a year ago. Wow, almost a year ago. I was like, oh, there's a 4-hour gap. And what was interesting is all the other 4 hours that were formed after it, this one here, and this one here, this one here. It took some time, right? It took some time, but they got filled. This one here, this was a big one here. We were basically February 18th, gap right here. Didn't fill it until February 26th. This one here, opened on February 20th. Didn't fill it until March 5th. So all these 4-hour gaps were being filled, except for this guy here. So I'm like, 13.8, okay, that one get filled. But Bitcoin got very bearish and very bearish and very bearish. And then I'm like, oh, there's no way when Bitcoin's at, 6,000, 5,000, 4,000. Oh my God, to get this gap still open at 13.8, there's no way that's going to get filled. That's just ridiculous. Um, and then we basically started 2019, and all of a sudden, what basically started happening here was, let me see if I can, nope, there we go. Oh, that's better. Do that. A little more out of the sun. So when that happened, we basically started moving higher here, and I'm still thinking about in my back of my head, 13.8 is this gap here on the 4-hour CME chart, but now we're going to fill that. So what happened? Well, actually, we had a new gap here that's opened up at at $3,500. Just a 4-hour. Yep, at $3,500 right there. This wick did not close it. We have the gap open here at $7,300. And if you look at this, see here, where is it? Oh, yeah, exactly. It's this one here, right there. 71, 74. And we only got here as low as 72.92. So there's still a gap open here, just a hair under $7,200. Yep, solid 70. And oh, what is this? What is this? It's not all bearish, people. It's not all bearish. There's a gap right here at actually it's right here. It's almost 11. Really, it's up to 11.9. 11. Oh wait, that one fell. No, yeah, it's up here. It's up here, right there, because there's the close, there's the candle, and there's the open. So yeah, it has to come up to here. So that's almost at like 11.9, really. Yeah. Oops. Right there, 11.9. So these are 1, 2, 3 gaps that are currently open on the 4-hour CME. Now, this gets back to the reason why the 4-hour is the most important for me. It's because Bitcoin's top so far was right here, and this upper wick, this last little push, this 4 hours candle, which actually only took about 20 minutes to actually push up here, filled that gap. It filled that gap on the 4-hour chart from way back here. And that took 526 days, a year and a half. But this gap, which I thought would never be filled at 13.8 when Bitcoin was down at $3,000, it literally marked so far the nut top all-time high for 2019 of this year. So ever since that happened, I take very seriously the 4-hour, down to the 4-hour chart in terms of which gaps are open. And if that's the point, if that's the case, then I see these 3 gaps being filled at some point. I don't know which one gets filled first, but I expect 11.9 to be filled. And I also expect 3,400 to be filled, with obviously 7K somewhere in between. I don't know if we go down, up, down, or if we go down, up. But these 3 are the current ones that I'm watching. And over time, I'm sure there'll be more that will open and close. But that's how I see it. That's how I see the CME. And I will continue to monitor that and continue to see it as very important to keep note of where those specific gaps are. So, guys, kind of wrap it up here. Oh, my mic is low. Is that better? Where those specific. Wrap it up here. All right, I think that sounds okay now, right? That's a little better. Yep. Oh, that sounds fun. Gap here at oh, shut up. It's right here. It's almost 11. So again, just to sum up everything here, and I did want to talk about patterns here. So let's just kind of finish off the show today. It's funny, I only want to do 20 minutes and then a half hour just flies by. All right, so just a couple things here. You know, are we in a falling wedge? It's hard to argue we're not. Is this a bullish pennant or a bullish flag? Actually, now it'd be more of a flag than a pennant, right? Um, it's possible, for sure. Do we have another touch down here to, 84, 83? Do we have just a straight shot up? And if we do have that straight shot up, do we have to do some sort of a back test before expansion? If we break down, do we back test, get rejected, and come back down? Do we find support again and blast off again? Do we find resistance again and just come right back down again? Choose your own adventure. We are consolidating with lower highs. We are consolidating with lower lows. Okay? 9K used to be support. It is now resistance. The fact that this wick here we had on October 11th was resistance, turned support. Now we're still under it. Okay, we're over the bodies, just barely, right? Still hanging in there. So you could argue we're just barely supporting it, as well as the fact we really still haven't hit our golden pocket yet. We're still hovering around the 55. 55% of this run we've given back. Do we know our target here, our bullish target here, based on the flagpole? Is this a flagpole here? And if so, when we do break out, are we going to go the distance of the flagpole? Oh, look at where does this flagpole take us? It could take us all the way up to, look at that, 11.7, 11.8, 11.9 maybe. Fill that gap on the CME. Is this a narrative? Sure. Flagpole up, fill the gap on CME. Mission accomplished. And then we start fading down again. Or no, do we go higher? So that's definitely the bullish scenario here. But also in crypto, we have seen these pennants just fizzle, right? False breakouts. Lower highs become lower lows. Higher time frames. Oops. Daily Bollinger is still pretty wide, but tightening. Still haven't touched lower Bollinger yet. 3-day, just holding on to middle BB after losing it for the past 6 days in a row. Weekly, still way under middle Bollinger, but did have that nice bounce from the first touch of the lower BB. Also note that all three bands now on the weekly are angled down. That is notable. So these are the things we're still watching. Oh, let's go to May. No, let's go to Bitcoin Master. This one. Stamp is fine. Okay, weekly, we're still in the cloud. Remember, my Ichimokus are a little different. I set 20, 61, 20, 30. So we still have, from the higher time frame standpoint, resistance.
Certified to reduce 10 times more contaminants than the...
Shut up. Commercial. And we still have MA support on the 100, the 50, the 200, on the higher time frame weekly. But the 3-day, we are finding that 50 resistance. And on the daily, we're still finding that 200 resistance with 50 support, with this bearish cross still setting up here with the 100 and the 200. A couple days away here from actually doing their first bearish cross. Since way back here. Boom, right here, where the 100 fell into the 200. And that actually area did mark the local top a little bit after that, right? Maybe about 2 weeks after that for Bitcoin price action. So you've probably heard it before, but very critical moments here in Bitcoin. We're still finding supports on specific moving averages, finding resistance on others. Volume is still lackluster, not really knocking our socks off. And what's going to be that catalyst that convinces the market this is still a good value? Okay, we've had lots of time to buy Bitcoin 13K, 12K, 11K, 10K, 9K, 8K, 7K, 10K, 9K, 8K, MK, EK, OK. When will this play itself out? Probably sooner than later, as this wedge gets tighter and tighter, and as the need for that bigger move will warrant that price action. So with that, guys, remember, trade safe out there. Always use your stop losses. If you enjoyed my content today, give me that thumbs up. 38 minutes of rip-roaring Bitcoin price action and analysis. These are fun, so I want to continue to do these. Maybe not every day, but I want to get a little more active on YouTube than I've been during these winter months, if you will, or summer months, depending upon what part of the hemisphere you are in. So with that, it's Big Jonas. Remember to follow me on Twitter, follow me on YouTube. Please use my affiliate links if you'd like to support this channel. And until next time, it's Big Jonas. Peace.